All right, welcome to the new Technical Wizard series. We're doing this on Fridays now. And basically, the goal of it is to pretty much swap this with the Sunday night prep. So we're still going to do a breakdown of the overall indices and kind of go over everything, but we're just doing it way earlier on a Friday near the close of the market session at the end of the week. And we're just going to dive in and go over everything and make sure we are not only reviewing anything that happened this week, but also wanting to take a look at the broader picture going into the next week. That way, I know a lot of people can't make it on Sundays, and I personally spend a lot of time on my own on Sundays, trying to do Sunday night prep. So by this way, this will help me get my Sundays back a little bit so I can spend time with family and my wife and etc. So this is a good way for me to balance that out. And what better day to do it than on Friday when there's more people around. And not only that, this is recorded also, and will be posted on the YouTube, and we will go from there. But all right, well, here we are. It's been a pretty fun week. We've had to deal with a lot, from 2 downgrades on Apple to FOMC minutes. We've had tons of jobs data from JOLTS to the non-farm payrolls today, which everything came in pretty strong for the non-farm payrolls, and we've seen pretty good strong growth in government jobs, which is pretty fascinating since the Fed is trying to combat the strong jobs market, just to see it cool down a little bit. And also, we've seen wage growth continue to move ahead, and that is something that the Fed does not want to see. So yeah, how do we how can we anticipate rate cuts if we're nowhere near what the Fed wants to accomplish? And I think the market is waking up to that situation where, and we've seen it with the Fed funds. We've seen that number come down a good bit to where they're no longer anticipating as much of a rate cut for the March meeting. That is starting to slowly dwindle down. It's now like a 50-50. And the argument is, maybe they'll do it in June. I've heard some analysts come out and say, okay, we'll expect rate cuts in June, but the Fed is leaning more so towards the second half of the year. We also had some crypto news this week. There's a lot of discussion on the Bitcoin ETF. And yeah, the Fed minutes gave us more clarity into the possible rate cuts. The market's trying to price in 6 to 7 cuts, which is a lot, when actuality, rate cuts probably aren't going to start until the second part of the year, and it won't be, as much as the market is anticipating. But yeah, we've had the jobless claims this week, came in at 202K versus 216K. Let's see, the JOLTS. We also saw the non-farm payrolls come in, which came in at 216K versus 170K. So that was really heated. We also saw that they revised the prior readings lower, which, you can view that as a positive situation. They've constantly been revising the non-farm payrolls to the downside. So, and today we've seen it. There's been a lot of interesting movement today. We had a nice move to the upside this afternoon, and we've pretty much given that back, and down we go. We're trading below where we started this morning, and have essentially just kind of subtracted that entire move today, and below the opening range low. Looks like we got another series of lower lows here. So the market weakness does continue to be the case, but keep in mind that the market, especially the NASDAQ was up 54% during the 2023 year. And we had a very strong December. So coming into this year, maybe there's some profit taking, maybe there's some nerves, especially with these constant Apple downgrades by Barclays and Piper Sandler. And not only that, maybe there's a little bit of nervousness going into next week, which is a key thing that we need to take a look at here. And let me, I should probably, there we go. Looking at the economic calendar, we can see that starting on, let's see, we got some Fed speakers. Thursday, you got CPI. You also got the jobless claims coming in. And we got this weird advertisement lady that's kind of weird looking. We got the jobless claims, and we have the PPI. So inflation data coming in. Looks like CPI, we are expecting the CPI year over year to be around that 3%, core CPI to be at 0.3 month over month. So yeah, all eyes are going to be on that inflation data on Thursday. Let's make sure we're not missing anything. Let's see, you got a Fed Williams speaking there, Atlanta Fed. Okay, so that's going to be the big one for sure next week is the CPI. And not only that, we are starting to gear up for those earnings reports. Starting, mainly, there's some interesting ones here. If WD-40, if you're into WD-40, I guess you got that. But on Friday, you got some interesting ones. Financial names: J.P. Morgan, Bank of America, Wells Fargo, and BlackRock. Those are going to be some pretty interesting readings. And then you have Delta and United Healthcare. So at the end of the week, we'll get into the start of earnings season. And as we progress through the month of January, it'll get even more heated with those Q4 earnings reports, and we'll see how well that consumer spending and all that kind of good stuff is turning out to shape up. So keep your eyes on that. But yeah, we were definitely data heavy this week for sure. But all right, enough of that. Let's take a look here at the big picture of everything. We can see that the SPX is coming off the highs at 47.93. We can go ahead and put in some fibs if we want to. And let's see, draw from the low to the high there. All right, so the 382 would put us down to about 45.30. That would be a pretty substantial move there. And that would take us all the way back to the daily 50 at this point. We do have some dynamic support on the hourly here with the hourly 200 sitting at about 46624. And let's see, let's go to the ES chart just to kind of compare that. Boop, boop, boop. So yeah, if y'all are new to like this style or, my style or just in general, maybe, Sunday night prep / what we're doing right now is we're basically taking a top-down approach to the markets, looking for relative strength, relative weakness. We'll check out the peripherals and see if there's anything going on underneath the hood that we need to certainly be aware of. If we look at the ES hourly, it was shaping up to be a pretty interesting session. To kick us off, my key levels are still marked where they've been. We came up and broke the upward trend down. The downward trend channel. Broke back above the hourly 50. Had a nice close, but since about that noon hour or so, we started to fade even further, and we're even starting to retest the downward trend channel. So if we can hold this and bounce from there, we'll see what happens from there. But remember, 47.50 was the key spot. We had that one candle close and then down we went. So a little bit of a trap set up there. And now we just got to see if bulls are able to regather themselves and catch some momentum going into next week. But first things first, we have to get back above 47.50. Once we get above 47.50, that opens up the door back up to 4,800 on the ES. You can see that we are came from oversold conditions on the hourly based on that RSI. So we'll see. But if we start to break down below 4,700, that's when it gets a little bit more dicey there. Lose 4,700, then your next key spot is going to be the rollover gap. Which would be around 46, about that 46.50. So a little bit of these 50-point increments here on the ES are currently the hot spots to deal with. So looking at the squeezes and all that kind of good stuff, we'll take a look at that and see how things are shaping up. We can see we're coming out of a squeeze here on the weekly. The daily has shifted gears, and we might even enter a fresh new daily squeeze. That could be something to entertain. You know, when I'm looking at the weekly chart here, the one thing that I am taking note of is we've come all the way up to +3 ATR on the weekly. So we've gone hot and heavy for quite some time off the lows at about 40, what was that, 4,100 almost, all the way up to 4,800. So we've ran about 700 points in the span of what, 7, 8, 9 weeks, give or take. And so a cool off, yeah, it's not that bad of an idea. And if we can enter in a fresh new daily squeeze as we approach earnings season, maybe that could open up the door for us to move on higher. You know, as you know, hard as that might, you know, seem to believe at this time. You know, I know everybody's probably kind of frustrated. Everything's going down. You know, Apple's getting whacked. But there's plenty of things out there that is holding stable, and we'll kind of go over those. But as it sits right now, the S&P futures, yeah, watch those key spots there, and we'll just take day in and day out now. The daily 50 currently sits around the 45.65 level on ES, and we'll see. We'll come back to the ES before the daily session closes. I don't know why I got so many volume bars here. That's kind of weird. But all right, let's go over to the NASDAQ. Boop, boop. My system is running a little slow. It's running slow this morning. I think it just needs a little bit of a reboot. It needs a rest, but it'll get plenty of rest because I'm not going to be here. Well, I'll be here at work, but I'm not going to be at my home office for 2 weeks. We're going to Tampa, so I'll be on my road setup there. All right, the Qs. Yeah, initially we had a new lifetime breakout. Broke out into about that 413 mark. Let me get rid of these so they're not kind of holding things up. We've had 1, 2, looks like we're going to have 3 consecutive closes below the 21 EMA. That's not really a good sign. The next key spot here for the NASDAQ is going to be that daily 50 simple moving average at about 386.75. Or towards 383. Same thing here as with the SPX on the weekly. We've had this huge move in tech in 2023, had a nice little weekly bull flag, and off we went into new lifetime highs up into +3 ATR. So a little bit of a cool down makes a lot of sense. And look, that's our first red bar that we've had in 10 weeks, you know, so things can't just constantly go higher and higher. They do have to come down and breathe a little bit. And you know the market is a breathing thing. It needs to pause, and I believe that is exactly what we are doing. The weekly squeeze fired long. We are getting our first dark blue bar. If we get a secondary dark blue bar, then that could suggest that the weekly squeeze has run its course and momentum is shifting. What I am curious about is, let's take a look at the monthly squeeze, which is, you know, way further down the road. But I just want to take a peek to see how that is shaping up. All right, so monthly squeeze, we did fire, and it's, yeah, we're still running on the monthly squeeze, and it's technically still a little early here. Let me check out the SPY too. I meant to look at that one. Boop, 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 boop. Yep, same thing with SPY. We are firing off on a squeeze on the monthly time frame. And yeah, this just takes time, guys. It's not like this is going to happen tomorrow or by Tuesday, but monthly squeezes once they fire, I mean, look at this was our last monthly squeeze back here. Once we started to get that post, we had the COVID drop down here, and then we ran up a little bit. We got into a new squeeze, and then off we ran. Now that doesn't mean that we're going to have another crazy run up like we had in COVID, but maybe we'll get that volatility expansion. And because we are primarily in an uptrend, most likely the squeeze has better odds at firing to the upside. What am I using for the ATR bands? Yeah, they're just ATR. Let me see. Keltner ATR bands. Here, I'll share it. Share. There you go. There you go, Risky G. All right, so looking at that looks pretty good. Let me go put this on the weekly. So we looked over the Qs. We've talked a little bit about the Russell earlier today with it. Small caps are going to have a tough time, especially with higher rates for longer, because there's a lot of domestic companies there, a lot of companies that have harder time at hitting a profit, just a lot of crummy companies really within the IWM, within the Russell. So it's going to affect the IWM a lot more than something like Apple or Nvidia, who has all the innovation and a crap ton of stockpiles of cash that they can rely on themselves. So the Russell 2000 has moved back lower this week, retraced all the way back into the prior range, which is unfortunate, but overall we'll see if things can turn around. It looks like trend is just the short-term trend at least is shifting. You can see on the Russell this downward trend on the hourly is pretty bruised up. You got the key moving averages moving swiftly lower here. The 21 EMAs pointing sharply down. The 50 hourlies also pointing down. So yeah, a little tough spot here for the Russell. Let's move on. I want to check in on the rates because rates are back at 4%, and that is definitely a psychological notion here. But one thing to kind of key and point where it's just kind of fighting with the daily 200 simple, and since we have a swing high and a swing low, that does give us the opportunity to go ahead and put in some fibs and get a better idea. Okay, if rates continue to push higher here, what are we looking at? Are we looking at a move back to 4.5? Yeah, 4.5 would get you to the 618, but your first start would be 4.25. So that is definitely something to keep in mind here as the market, as rates get this little bit of a dead cat bounce, and especially as the market readjusts to rates higher for longer. And maybe this will change once we get the inflation data. If we get a cooler inflation reading, then these yields are going to come down, the dollar is going to come down, etc. But as it sits right now on the hourly time frame, we can see that trend is still pretty bearish. Even the daily is still bearish. So is this a dead cat bounce, or is this the start of something else? Personally, this is just my personal opinion. I think we've peaked the highs here at 5%. There's no reason for the Fed to raise rates right now, and they're certainly not going to cut rates right now, because if they cut rates right now, that does introduce the possibility of inflation coming back onto the table, and that could cause all sorts of problems. And you don't want that. I don't think the Fed's going to cut rates anytime soon. I think they're going to wait until later on in the year, unless something breaks, of course. And if something breaks, what broke? Why did it break? And then the Fed would have to pivot, and we'll have to take it from there. But as it sits right now, 5% is the peak. No questions asked. So in my eyes, this is probably just a little bit of a dead cat bounce. We'll have to keep an eye on energy costs. There's definitely a lot of interesting data out there, especially when it comes to the turmoil going on not only in Ukraine and Israel. Now we have the Red Sea issue, shipping lanes being closed up. I even think Maersk came out and said that they are stopping all shipments in the Red Sea. So there's all that. That could affect inflation. So the cost of goods going up just because of everything going on, not to mention the cost of oil and all that. So oil and energy is a very big important factor when it comes to uh, yields. And speaking of oil, crude oil is also higher on the day. Crude oil's had a pretty interesting bounce. It is up 2.2%. And yeah, it's just been holding steady above the 68 level. Remember, 68 was our pretty big key spot there for our technical bottom. And as long as it holds 68, you could technically play off of a low there, and we did that with PSX, and PSX still looks good. Energy still looks pretty interesting as things have kind of rotated out of tech a little bit here. So crude oil continues to maintain that bounce. Let's take a look at the dollar and see how the dollar is doing. And one of the outperformers too is I'm going to bring this up, was the Dow Jones this week, but that's besides the point since we've kind of moved on from that. All right, let's take a look at the dollar. The dollar, yeah, it's just kind of messy. It's just been meandering higher. Nothing too alarming, in my opinion. It still has a lot of work to go. Now, if the dollar somehow got above 107, then I am pretty darn concerned about what's going on. So, as it sits right now, the dollar is just kind of having its moment bounced off of support here down at 100. Let's go check out, let's see, the VIX. Let's take a look at the VIX. Drinking some coffee. All right, the VIX has hit, kind of just been hanging out at 14. It's not really having any kind of crazy breakout. But volatility has definitely increased a little bit into the market, especially after the Fed minutes and getting into its head that, okay, maybe the Fed's going to have to keep rates higher for longer just based upon the jobs data. There is a daily squeeze in play. That is something that we definitely need to be aware of. We can see that the hourly structures have done some repair work. The moving averages have started to consolidate and trying to gather themselves up. We can see that 21 is now above the hourly 50 and the 50 is above the hourly 200. If the VIX, for me, the key spot is getting above the 200, which would be around that 16 mark. If the VIX happens to get a nice close above 16, that is concerning. You have a daily squeeze here that needs to be paid attention to, because if this fires long, then yeah, that could definitely cause some headwinds into the market. If the hourly here is starting to also squeeze, if this happens to shape up, we can see that the trend is neutral here. Then that is something to also be concerned about. So have a mark here at about 14.5. If we start to break through 14.5, pay attention to about that 16 level. That could spill trouble for the market, and especially with the inflation data coming up, either the market's getting too antsy and, maybe investors are getting too antsy, especially with everything going on. Who knows? But this is just what I'm seeing underneath the hood. So volatility creeping up, starting to set up that daily squeeze on support. If it gets above 16, definitely be concerned with that. We'll say if it gets above 14.5, definitely be aware of that. And then if it gets above 16, then it's look out. Yields continue to rock higher. I think right now yields are a little bit stable. We're at 40, almost 44.5 on the yields. And the 382 would put us at 4.25, but you're hanging out right here at the daily 200. So this would be something to pay attention to too. So there's definitely some interesting stuff here as far as the peripherals, as far as the dollar, the VIX, the yields. Let's take a look at the junk bonds. We haven't really looked at the junk bonds in a while, and we'll go through that. Remember, the junk bonds, if they're buying the junk, then everything's looking good. And yeah, as you can see, we've come off the lows quite a bit here, and yeah, it just looks pretty good. Let's see, this just looks okay. We had a weekly squeeze fire long. We hit +3 ATR, and we've had positive gains over the past several weeks. It makes sense for it to come down. So from what I'm kind of gathering here is that there's a, obviously we needed to cool down. I'm not seeing anything too alarming, although there is some room for a little bit concern, especially with that VIX daily squeeze. I think that's going to be the key thing that I'm going to pay attention to going into next week, along with the inflation data. Apple shares slip on report U.S. government is preparing an antitrust lawsuit. When is Apple not in a lawsuit is the case. All right, so let's jump into some individual names here. As always, if you have any ticker requests, feel free to shout them out. We'll take a look. Any stocks you want to take a gander at, we'll be more than happy to. But all right, Apple. Yeah, Apple's been punched in the face, or more so in the scrotum. We hit new lifetime highs up here at 199.62, and since then we've been beat to a pulp. So it's almost like, yeah, this was a false breakout, and down we went. On top of that, 2 downgrades. If we shift over to this screen here, maybe I'll see this screen better. If y'all see this screen better, I'll just start to use this one for you. That way you don't have to see all the crazy colors. All right, but here with Apple, you can see we've gone from overbought. I became Scottish there for a minute. Overbought to oversold really, really quickly. Yeah, right here. Overbought back at the end of November to oversold here at the beginning of January on those downgrades. But we're right here at the daily 200. This could be an interesting buying opportunity. I said that the other night or last night. But yeah, it does seem like more woes are coming if they're getting hit with another antitrust lawsuit. But yeah, this could be an interesting spot. And remember, just because something is oversold doesn't mean it can't continue to be oversold. It's just not often that Apple does become oversold. So that's something that I am paying attention to here. Apple's a big market player here, of course. We know it's got a $1 trillion market cap, $2 trillion market cap. Did they hit 3 trillion? I can't remember. So yeah, there's Apple for you. It needs to hold the daily 200. It's attacking it right now. So the bears are continuously just punching this in the face. And, I have an iPhone 14. Yeah, I have a 14, and it's nothing to write home about, and they're saying the iPhone 15 sales are nothing too crazy, and the 16 might also be the case here. So yeah, Apple might have some issues. They need to start innovating. They've only been really upgrading the hardware, the cameras and software and all that kind of good stuff. So there's that. Let's take a look at NVIDIA. NVIDIA was having a good day. Today had a good up move all the way up to what we hit what do we hit today? 495 was our high today. We went back and forth on NVIDIA today, had some fun with it. Shout out to Johnny Pools. He killed it on NVIDIA today. Made like 10K off of it, something ridiculous. So good job there. So yeah, NVIDIA continues to be resilient though. I still like this setup. It looks pretty good. Structure looks fine. yes, I'm still, again, I'm holding on to some calls that are a little bit out of the money. And yeah, I'm in pain in that position, pretty much down the entire thing. So if we do happen to get a break above 505.50, I will probably average down once again. Y'all know that is pretty rare for me to average down. Usually, once I'm in a position, I'm in a position, and that's it. But in this case, I truly do believe that this is continuingly to shape up. If we pull up the other grid just to see how things look, we still have this weekly squeeze intact here, and it is starting to fire away. So if Nvidia can start to catch a bid and this momentum kicks into gear, then off we go. And it definitely had some good momentum earlier on today. And yeah, I mean, we were able to take advantage of it. Not too too crazy, but we took base hits on it today, but it's still shaping up to look like a pretty good power horse. As far as some of the other guys, let's go to Microsoft and just kind of run down some of the Magnificent Seven, holding on to the daily 50 and that 366.78. For me, this is an important level. I want to see Microsoft to close above this 366.78 mark. I know I got a bunch of blue lines and green lines. Those are fib retracement levels. But as long as we hold above 366.78, I think we are looking a-okay. It's currently trading at about 366.85-ish. So it's close, but we got about 28 minutes until the market closes, and I'm still holding on to that position as well. All right. Let's go to Meta. Meta was a big winner today. Let's just kind of go through them. Boop, boop, boop. Communication sector has been a very strong outperformer in 2023. It's looking pretty good still. We had a good win here on Meta today also, and it's still looking pretty good. Nothing too crazy here. No squeezes. Oh, you got a weekly squeeze that's trying to fire off. I mean, Meta's ran off the lows from 88. If you were a buyer of Meta down at 88, pat yourself on the back, because I mean, holy cow, you killed it. But yeah, you got this weekly squeeze here firing along, and she's still looking pretty darn good. Structure looks great. You're starting to cool down a little bit on the daily, so maybe we can set up into a new squeeze there and go from that. I do want to look at the semiconductor ETF. Little bit of a structural damage there, especially if the hourly looks like it's trading at about the 165.35 mark. Yeah, if we start to lose that 165, look out below, and that could be, Nvidia's holding up, so it's not Nvidia, it's probably Broadcom. Broadcom's probably getting hit. Yeah, Broadcom has had a crazy move over the past few weeks. Traded from 900 all the way up to 1150. You can see it hit all my fib extension targets and even beyond that. So yeah, we'll cool down on Broadcom. That is definitely an issue there. Let's check out TSM. I just want to go over some of these other semis, see what they're up to. TSM, Micron had an upgrade. Micron's holding up, so that's good to see. Let's check in on Intel. Intel had a nice run to 51. It's pulled back, pulled into the 4650 area, and AMD is a pretty good one to look at as well. AMD, yeah, killer move here. Broke out above 132, hit a high of 150. What I like about this on the pullback on AMD is that we pulled back pretty much to that 132.83 mark and bounced all the way here off of overbought conditions on the RSI. No squeezes here on AMD, so nothing too crazy to worry about. Let's go now to maybe some setups that might look interesting for next week. Let's see. Let's check out some of these financial names. starting with my favorite, Berkshire. That's always the good one. Berkshire still shaping up, retesting that 363.42 mark. Still has a daily squeeze in play. This one could be interesting. They don't have earnings until February, so that's good. So I want to keep an eye on BerkB for another trade idea. So we got the daily squeeze. The hourlies cooled down a good bit. Possibly a little bit of an hourly. Was that an hourly divergence there that I saw? Yeah, a little bit of an hourly divergence. The scene of the crime would put you back down to about 355, 350. So we'll see if we get a little bit more of a pullback here. But as it sits, as long as it's holding 363.40, that looks a-okay to me. We all know JP Morgan's at lifetime highs, but I like Berkshire. Bank of America has earnings next week, but it had a nice move earlier today. Let's go check that out. Yeah, broke above 34, hit a high of, what was that, 35? My computer's being stupid. What was the high? Yeah, 34.69. So we hit the first target at 34.50. Next target would be about 35 here. So if you want to mark that, that'd be the wrong drawing tool. So here we go. Yeah, look at that. Almost nailed that resistance level there on Bank of America. Yeah, and your next key spot is going to be up here at about 35, 35.80, give or take, and then 37, of course. So that looks pretty interesting. You got earnings on next Friday. There is, overbought conditions here on the RSI, something to pay attention to. All right, let's check out some more. And like I said, if y'all have any ticker requests, feel free to post them up and we'll take a look at them. I'm just one man with two eyeballs. PDD still looks pretty interesting. I like it better above 150.66 though. If you get above 150.66, I know it's kind of hard to read. Let me kind of fix that. You're looking pretty good. Yeah, 150.66. You are coming off a little bit of a negative divergence here. Let's just go ahead and point that out. You see how this point is moving lower. RSI is moving lower, but the price action has moved higher here. Let me do it with this drawing tool. Maybe that'll help. Let's do it blue. All right, there's your higher high. Here's your lower high on the RSI. So you do got a little bit of negative divergence there on the RSI, something to pay attention to, of course. And then if we happen to break down below 142.50, then yeah, we send it to Putville and go from there. All right, let me look here. I haven't ran too many scans just because I just got back from the vet, so I'm going to have to kind of shop around here and see. Let me see what Starbucks is up to. This looks pretty gross. Did we gap fill already? Not quite, but it's getting there. Let's go to Visa. Visa's a all-time high name, cooling down with the rest of the market. Let's go to Lilly, LLY. LLY looks really, really good. Continues to be a market leader. You do have a daily squeeze here. That looks pretty. And a weekly squeeze. They also had that weight loss drug. So they're doing pretty good. Hope next week isn't like this. All the daily charts are ugly. There is a lot of ugly charts. There is some strength out there, though. As you can see, LLY looks pretty good. That would be a good trade on this. Let me pull up Lilly. Shares might be better on this. and safer too, especially with the market environment that we're in. So let me see here. We could look at the January 19th. I'd be more comfortable with a spread personally with this. Let's see. What would we, if we had a breakout here, let me see what would be the levels that we are looking at. Bloop, bloop, bloop. That would put your first target at about 660. All right, so January 19th, put debit spread on this. What would we want to get? 620. I don't want 5 wide. It would probably have to be 10 wide. 620 and 630 debit spread is going for $4. So we'd be risking $4 to make 6 essentially. So it's about a 1-to-1, a little bit more than 1 on that. That's not a bad idea. If this daily squeeze and weekly squeeze wants to fire away into lifetime highs again, then we could be in the right side of things. Momentum looks good. Hourly starting to shift to, I like that the hourly 21 held its structure here on the pullback, and off we go. So I might toy with that idea going into next week. I'm not going to buy it now. I think I'm going to wait until next week and see what happens. But Lilly looks really good. I know AbbVie's had a pretty remarkable run, probably a little bit too much of a run. Let me see here. I'm going to rerun this scan because I ran it earlier, and I want to see if anything new has popped up or changed. Ooh, definitely. If y'all don't have an Ember mug, highly suggest one. Keeps the coffee warm. All right, I see someone in the chat. IBM. Ooh. I think I was looking at IBM earlier, and I saw, or someone had mentioned that Kumo or someone is long. To me, it looks like a short. You had this breakdown of 160. Let me bring this other chart. You can probably see it better here. See this breakdown of support at 160. Now you're running back here to 158. Your dynamic 50 moving, simple moving average is down here at about 155 and some change. Yeah, to me that's a little bit of a breakdown here. We've gone from overbought conditions, and RSI is still hanging around 46. Ideally, you want it, in the 50s. And if we look at the other grid, you got this daily squeeze here trying to fire short. So I'm kind of leaning, if that daily squeeze continues to move down and this momentum continues to trend here, the hourly is pretty much busted. I would want to take this down to about 155. IBM has had a phenomenal had a phenomenal year last year, and I'm not too sure what the position the other analyst has. I'm not too sure what they see or what they use in metrics and all that kind of good stuff. But based upon what I'm seeing, I think IBM's trying to move lower here. So next key spot is going to be 158. If you start to lose 158, then 155.50 is going to be your next area. We can also run some fibs here and see what's up. Let's run it off this daily 200 and put it here to the daily 50. Yeah, that puts you back down to about 155. So that kind of lines up with the daily 50. So we'll leave it there. So 158 for your next level, and then 155. Make sure we don't have any other squeezes on it. No, just the daily. Tilray, some marijuana names. Market getting a little perky right now. Trying to break back above 4730. That's a good thing. You want the market to continue to hold where it is. Tilray, some marijuana. All right, so here's my issue with weed names. There's a lot of politics involved. Uh, they don't really have any help from the financial system. And until legislation is passed, not much you can really do. You got earnings coming up, which kind of puts a hamper there on technical analysis. So when it comes, I know there was that news this week about the DEA looking to do their revision of the possible reclassification of marijuana. That news definitely got the weed names going. All right. And I guess the key thing here, one of the key things that I'm looking at, I wouldn't say key things, one of the interesting things is you have a low here and then you have a higher low. So a low at 1.5 and another low at 1.6. That's a positive note. You're back above the 200. That's nice. Hourly structure, you got an hourly squeeze. It's interesting. And I believe Tilray is probably one of the better marijuana names out there, if I'm not mistaken. If you want to do the ETF, MSOS, I think that's another look you can take as getting exposure into the marijuana sector. I'm personally not involved in any of the marijuana names, but that doesn't mean I might not. But Tilray, you're holding above the 200. I think that's the key spot for me here. You're above the bull bear equator. As long as you hold above that $2.15 mark, you're good to be long. If you clear below that, then I would raise the caution flag yet again. Your price targets above are just going to be all these swing highs at 2.5, 2.6. Keep in mind, Tilray has been hit in the face left and right, so you're going to have nonstop overhead resistance as you progress forward. But say if the DEA comes out and says, okay, we've reclassified it, the government may now proceed with the attempts of the federal legalization, which I don't even know if we're close enough to that yet. I know the states several states have been pushing it and all that kind of good stuff, but I don't know if we're even remotely close. I don't know if Biden is, maybe Biden throws a curveball and tries to gain some more voter support because it is an election year after all. That would be pretty wild, wouldn't it? But yeah, as it sits right now, it's interesting from that, but from a business perspective, it's kind of risky right now. Banks, they got to be careful, where they store their money, and because it's not legalized, it's just a mess, But from a technical standpoint, I'm sorry, I just keep kind of rambling, but from a technical standpoint, if you hold 216 and this hourly squeeze continues to shape up, yeah, 250 to 260 would be your next step. So that gives you a nice 30-cent move on Tilray. That could be interesting. For penny land, that's pretty good. But you're going to deal with lots of overhead. Lots and lots of overhead. MSOS looks better. This looks a whole lot better. You have positive stack moving averages. This is the ETF, the cannabis ETF. So this actually looks better. It's trading at 778. Weekly squeeze in play. You do have a bottoming situation here down at the $5 level. Granted, if you got in now, you would need to probably, I would have my stops down here at about 6.5. So you need to understand you're going in with maybe some pain. So risking about $1.20 to make $2? Yeah, it's about a 1 to 2 ratio. I mean, that's not bad. That's how I would approach it. I like MSOS a little bit better than Tilray, to be honest with you. I like that one. I might have to look into that a little bit more. Boeing. Boeing had a crazy December. Crazy. You either love trading Boeing or you hate trading Boeing. When she flies though. You can see all my levels. let's clear all these lines up. Clear. Slowly but surely, the drop down button will show up. Are you sure you want to remove all the drawings from the default drawing set? Yes. If I didn't want to, I wouldn't tell you to do it. Mwah. Ah, futures perking up 47.35 now on the S&Ps. So we'll take a look at where the market closes in about 10 minutes. 10 minutes until the market closes. Make sure you are short up on what you need to. I don't know if anybody's got any lottos out there or not. Maybe A's. I don't know if A's usually has some pretty interesting lottos. Lady usually does as well. All right, so Boeing had a nice run off the lows from 176 all the way to 267, about $100 run here per share. Just absolutely crazy. Okay, so we've broken below the daily 21. Let's see. I went ahead and drew retracements back up to 23267, which would be your 382. I mean, we went from almost minus 3 ATR to like plus 4 ATR on the weekly. This thing needs to cool down, but it is strong, no doubt about that. You're starting to enter into a new daily squeeze here on Boeing. Structurally speaking, I give it like an A, just because you're closing below the 21, but you still have positively stacked moving averages. The 8's above the 21, the 21's above the 50, the 50's above the 200, and the 50 is curling upward. So short term, yeah, you're in this little consolidation phase, and we need to just figure out where it's going to pick up the pieces. If it does want to retrace the full 382, that's where I would look to pick something up. That 50 simple moving average is going to eventually catch up to that mark. So that's where I would look. But right now, if you look at the hourly chart, the hourly is shaping up pretty good. You held the hourly 200, but you can see the hourly 21 did cross down below the 50. That would be a bearish crossover in my book. But you're just kind of holding up. So right now you're just kind of sandwiched here. You see this? There's that. There's that. If you start to break down below the hourly 200 at about this 245 mark, I would look to go short all the way down to 232. But once you get down to 23267, that's where I would look to possibly buy, because this moving average here is going to slowly catch up to it in the next week, or probably about next week it should catch up. So that'd be a good, interesting spot to here is a good spot to buy it alongside here. So that's where I would look at. But if you start to break down, it'd be a temporary short from 245 all the way down to about 267. So that's how I would approach Boeing. But overall, and it had a hell of a December. Really impressive. All right, let me see here if there's anything that I need to look at. Dexcom is in my scan. Let me check that out. That's not bad. This ain't too shabby at all. All right, so I like it above. Let me get rid of you. Dexcom, this looks good. Yes, clear it. Quit being slow, computer. My computer's so done. It's like, I'm tired, leave me alone. Calm down. You want to work now? There we go. Lord have mercy. There we go. 126 is the level to break on Dexcom. I really like that. So above 126, we would be looking for a move all the way up to about 133. That one's definitely going on the watch list there. You got a daily squeeze and a 4-hour squeeze on Dexcom, so I like that. And let me see here. Dexcom. Berkby was another one. Lilly is on our list for next week. And we want to keep an eye on Apple. Oops. We want to keep an eye on Apple because Apple is trading right on its daily 200 simple moving average. And just to kind of peek up how the end of day is shaping here on the S&P futures, yeah, nice little recovery here at about that 47.20 near the low of day. Yeah, at the low of day actually. And yeah, nice little recovery there, back up to 47.36. So good job if you play in the bounce there. That looks great. All right, let me run one scan here just to see if there's any interesting daily squeezes that I want to be aware of. And I might look through those scan results. All right, we got Microsoft in a daily squeeze, Nvidia's in a daily squeeze. We know that. Burt B looks good. TSM, ZOM, MasterCard, Pepsi. Pepsi was an underperformer today. Pepsi was getting clapped. Holding the daily 50. You're in a daily squeeze. Yeah, that's not my favorite setup. We'll ignore that. Plus, it's not really my favorite sector. Let's go check out UPS. Got one on there. Oh, and W days on the list. UPS. So if we can clear, what is this level? Let me remove that. 159, 160. There we go. About 160 and a half. That opens the door back up to 164.25. Got a daily squeeze. Hourly is also squeezing. 4 hour looks good. Structurally speaking, okay, so this is not bad, and it would put us in, well, it would get us away from tech too. So I'm going to put this as possibility. UPS, not bad. And let's see, let's go over to, let me see here. Shop had a good bounce today. And let me see, is there any others I want to take a look at? Sectors. Let's take a look at our sector performers today. Crude oil up 2.3%, yields back above 4%, semiconductors up 0.62%, communication sector up 0.5%, financials up 0.45%. Okay. Interesting. The Dow Jones continues to be the strong man of the group. Green today again. Let's see. IWM down 0.2%. Bitcoin, a little bit of recovery there on Bitcoin. Let's go check that out. See how she's doing, because like I said, they had that ETF news today. Was looking for a much better move, obviously, on Bitcoin, especially after yesterday's resiliency. It's still pretty resilient. That MSTR position is expiring worthless, nothing to do with it. Definitely want to keep an eye on those names for next week too, as if Bitcoin continues its push higher. So yeah, MSTR falling down with the rest of the market. Let's check out Coinbase. Coin. Got 1 minute till the bell. Make sure you are good to go. Coinbase, it's all right. All right, so just to recap here, let's go back to the SPX since the bell is about to ding-a-ling in about 15 seconds. All right. Pretty interesting day off the jobs data. Looks like we're holding where we need to hold. So that's a good sign. SPX is looking to close above its daily 21 EMA, so that's a positive note. Yeah, next week's going to be an interesting one. We got inflation data with CPI and PPI CPI will be coming in on Thursday, and we got earnings kicking up next week, primarily on Friday, with the banks. And let's see, let me look at this ES hourly one more time just to get an idea of where things closed. So yeah, it's going to be an interesting week. We've had a busy week this week with all the jobs data, the downgrades on Apple, you name it. I mean, it's been a busy one for sure. I'm tired. I need another 4-day break. All right, as you can see on the ES hourly, I mean, we held where we needed to hold. See that trend line? Bounced right back off of it, broke through, retest several times. So that's good. Yeah, if we can clear back into 4750, that opens up the door towards 4800. So we'll see what happens. If we can break down this 4750 resistance zone, it was prior support. Now it's acting as resistance. We got to clear that level next week if we want to see any sort of progress. I'm sure the market is going to be heavily anticipating that inflation data, and we'll see what's in store for the market. All right. Any questions? Individual names that we found was Dexcom, Berkby, Lilly, Apple, UPS. MSOS is a pretty good one. Well, it's an interesting. I wouldn't say it's an A+, but it's interesting. We'll throw that one on there too for the list. And yeah, we'll keep at it. McDonald's nasty downgrade today, down a good bit, down 2.75 points on that. But okay, good job this week. Way to stick it out. We've had a great week, no doubt about that. And we are looking forward to our first full week back. So hooray. Happy New Year. Have a great weekend. Be safe. And I will see you guys on Monday. This has been recorded. Hi, YouTube. If you need to go back and review anything, or if you have any questions, feel free to let me know, and we'll do that. And even, of course, anything changes over the weekend, we'll go over it later on. All right. That'll do it for Technical Wizard Friday. I'll see you guys later. Have a good weekend.